The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there are having a fun and an exciting and indeed a profitable trading week. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network. And I am joined today by the usual cast of crazies, starting off with the man from the mountains himself, none other than good old Mike Tusaw from Know Your Options, Inc. Uncle Mike, welcome back to the show, sir. How are things in the land of St. Charles, Illinois?
Oh, doing great. Always excited to be here on the Option Block on this ex-dividend Thursday for all the SPY products.
Yeah, ex-div. All kinds of fun stuff coming up for SPY traders. And, of course, we are also joined today in the old Option Express hot seat by good old John Grigas, the major domo over at the trading desk at Options Express. Mr. G, welcome back to the program.
Good to be back. Thank you, Marcus-san. Yeah, like Tusaw said, ex-dividend date for a lot of ETFs tomorrow. SPY, Qs, XLE. What is it, triple or quadruple witching tomorrow? So it's a busy day today, tomorrow, and Monday.
Hey, I kudos to Joe Cusick and the guys.
I saw that yesterday, right?
I thought that was a great thing, and it's one of those things that I'm staring at charts and screens all day, and that made me feel good to just see that as a reminder. It's like you never know. One thing that I always tell my wife, make sure that if I'm ever not there, that if we're launching our boat, put the plug in before you launch it. Yeah, I know. And so it annoyed her for many years until one time she launched the boat without the plug in it. And so I'll never forget, I was actually working at Options Express at the time, and you can even ask Joe about it. She calls me on the cell phone, saying, "Where'd you put the plug?" And so I knew what had happened right away. I used to sit where all the HR girls are, John, on that floor.
Do I? Yep.
So that's kind of where I used to sit by, and so I couldn't get a cell phone signal there when my wife was calling me. So I had to run over by that window, and I think I even tripped on the way over there, and it was quite the sight. But nonetheless, my wife, being the handy person that she is, got everything handled quickly, and everything was okay. But that's what I thought of when I saw that email. It's a very basic thing that everyone should know, but for some reason you get caught in the money on something you don't want to be assigned on, some type of spread, you'll be glad that you were reminded to put the plug in the boat.
Yeah, and you'll also see these traders that'll see a call spread trading over the strike difference and be like, oh, I got a free trade here too, and not realizing selling at 30 cents over on a $1 strike differential is going to cost you 40 cents on the SPY the next day. Yeah, we actually take big ownership of the risk of assignment on these ETFs. We pull a DBA run and we pulled out about 275 accounts today that had assignment risk of $500 or greater. And then we call them, busiest day of the week, today and tomorrow. We try to reach out to these customers, and we don't get a hold of many, but the ones we do are kind of have the same response that you do, that they're very appreciative of the effort. It does save them money once in a while.
Yeah, I thought it was good of Joe to point it out. We obviously run the Expound newsletter from Options Express on the old Options Insider, and I made a note of that myself to mention on the shows because I thought that was an interesting little tidbit that Joe threw in there. That yes, indeed, it is X Day coming up. So all you people out there with expiration on top of it, it's just all sorts of fun coming up for a lot of ETF traders and a lot of SPY people really are oblivious of that aspect of trading those products. So it's always good to throw those reminders in there every now and then for the people listening at home. And speaking of listening at home, let's dive right into the trading block.
The trading block.
All right, and welcome to the Trading Block. This is, of course, the portion of the show where we dive into some of the interesting tidbits moving the market and catching our eye today, and some of the hot stories that our readers are picking up on over at the Options Insider that are moving the options market. And it was a relatively mild day on the street overall today. The S&P closed up about 4 handles to 1215.75. The Dow closed up 45 to 11,868. The NASDAQ closed up nearly 2 points to 25.41, and the VIX cash continues its somewhat perplexing downward slide to 25.11, down nearly a point or nearly 4% on the day. And the VIX cash is starting to get a little bit overplayed when you're even seeing all the major publications starting to write about why is the VIX still down after all these days of the market being down. And I think what's going on in Europe, we're seeing a lot of people just putting their 2 cents in on the VIX. So it's kind of fun to see all of the different opinions that go into that. Of course, a lot of people are really oblivious to the primary driving factors going on out here, which is, of course, order flow out in the SPX and the VIX products that are moving this thing quite a bit. But very interesting nonetheless. And, of course, these are the days that the SIBO loves, or should I say hates, when they've been pushing this product for so long as a great portfolio hedging tool, and yet we've seen almost a week now where the VIX has moved pretty much in lockstep with the market except for today. So yeah, very interesting stuff going on in the volatility spectrum. John, you guys getting a lot of frustrated calls over at OX saying what the heck's going on with my VIX position here?
Yeah, I mean, especially when they call us as the experts, and we've told them that it's an inverse relation, and anytime the market's going to go down, except when you're up or down a small amount during the day, that you're going to see that inverse relation, and it is a good portfolio hedge and to hedge fear, and an alternative to gold. And then you have the past 3 days where the correlation it no longer exists, but it's a great analogy for trading. It works nothing works all the time. There's no perfect hedge. And that kind of goes along. That goes along with the VIX. I sit behind Tim Navabi, and I'll hear him say that all the time. There is no perfect hedge. I mean, and there is no perfect trade either. And the VIX can skew itself as we've seen last few days.
Yeah, and that's one where I like the VIX as a trading vehicle, and I have no problem as a trading vehicle. Like, even if you want to do a pair type trade of doing some calls on the VIX and maybe some futures on the E-mini or something along those lines in the trading world, I have no problem with that if you're looking to play that inverse relationship. But when you're dealing with your nest egg, folks, if you're dealing with the money that you're going to need to live on in your retirement account, I've never been a fan. You can go back on this show for the last year and a half or however long we've been doing this show. I've never been a fan of using the VIX as an outright hedge. As a trading vehicle, yes, it's a wonderful, awesome thing. But as a true hedge, if you're going to buy a put, folks, buy a put. I don't think it makes sense to buy insurance on your car to try to protect your house. Now, if you have a fire on your property and it's a really bad fire, then yeah, both your house and your car are going to burn down. And so maybe you made a little bit of extra money by doubling up on your car insurance, if that's legal, which it's actually not. But my point is, if you're going to buy insurance on something, buy insurance on the right thing.
Yeah, that's I fall into the same camp, and I think I've expounded on that same philosophy here on the show a number of times. That you know what you're getting into when you're trading VIX, and if you're coming to it as this sort of inverse hedge for your portfolio, then you really are coming at it, I think, from the wrong point of view. And I definitely, when I'm looking to hedge or looking to do something, I tend to 99.9% of the time I go the direct route. I can't remember a time, if ever, when I've ever looked to the VIX for that sort of opportunity. And surprisingly, we had Larry McMillan on one of our shows recently, Volatility Views, last week, and I put that, maybe 2 weeks ago now, and I put that question to him, what he prefers, a direct SPX put or the VIX call. And he actually opted for the VIX call. I thought it was very surprising and an answer that I did not expect from someone who's been in and around the business for so long. And I think if you're interested in that, by all means, head on over to the Volatility Views program and download that program with Larry McMillan. I believe the title of that show is, of course, Larry the Legend, because he has been around for so long. And listen to Larry's viewpoints on why he thinks a VIX call is superior to an SPX put or a put spread. We can discuss later, but very interesting thoughts, I thought, on that subject. And of course, everyone and their mothers writing about what's going on in the VIX today, the boys and barons and everyone else piling on to this. Why on earth is the VIX continuing this erratic movement? And in fact, that's some of the top headlines that we're seeing on the Options Insider today. And if you're curious about any of these stories, by all means, surf on over to the Options Insider on the homepage or any of our other pages, and you'll see the news ticker there where you can click on these various stories that are lighting up our tape for our listeners here. And of course, one of the interesting stories I wanted to put onto the show today, Mr. Tusaw, because a lot of our readers on the site are clicking on it today, was an article from Seeking Alpha that was in our news feed about GLD put options still being relatively inexpensive in terms of looking to hedge. So if you're one of the few people out there who still needs to hedge your GLD downside, then this is not a bad time. And of course, I take anything I read at Seeking Alpha with a grain of salt, because we all know there's not too much vetting and verifying that goes into what goes up on that site. But nonetheless, a lot of our readers were clicking over to that story today and checking it out. So I thought I would put it to you as someone who's in and out of GLD options on a regular basis. Do you agree with that? You think this is still a decent time to get in on some GLD downside if you need it, or has the boat passed you by?
No, I think it's always a good time to get in on a collar. But one thing that, like, yesterday, for example, 2 days ago, I rolled down our January 160 put to a January 150 put, just from the standpoint that we've taken a profit on it. That's just our methodology as to what we do. And I don't know if I would say that it's dirt cheap premium right now, but it is. I would say it tilts towards the less expensive side, but to say this is dirt cheap premium, at least from the months and dates that I'm looking at, I wouldn't call it dirt cheap, but definitely to the lesser expensive side, that's for sure.
Yeah, I thought it was interesting given all the moves we've seen in GLD lately and I haven't had a chance to actually look at the skew and see if that is indeed the case. But yeah, you usually have to pick your battles in some of these names, and if they've had a significant move, as some of the metals have lately, sometimes you have missed your chance. And I agree, at the end of the day, a collar and some protection is better than none, but you definitely have to pick your battles when you're putting those on, of course. Another interesting story that a lot of people were reading today on the Options Insider, I thought was interesting for us to discuss as well, was a story that came out of Reuters. And I know most of the people are writing about options over at Reuters. I don't know this guy who wrote this one, I believe, but it was pretty much an article debating and discussing the sideways movements of the market right now and what you could do. And of course, they were talking to a variety of experts, quote unquote. And one of these experts picked, and it's hard to tell the way they wrote the article, whether it was the author suggesting the strategy or whether he was picking this. He didn't attribute it to any of the people in the article, but essentially goes on to recommend straddles as a way to play this market, and saying, hey, if you're Joe Retail out there, pick up a call, pick up a put on your favorite name, and pretty much you have a straddle that can make money in any market condition. And to their credit, they do go on to quote someone like a paragraph later who pretty much says that's an insane idea for retail. But still, I think it's worth bringing these up because a lot of people are clicking onto this story here today on the Options Insider, and that we're still seeing people recommending straddles in this day and age. And I don't know if you guys agree or not, but I think it almost should not be allowed to recommend straddles unless you follow that up with the appropriate discussion of gamma scalping, because the two go hand in hand. If you're not going to do both, then you really shouldn't be diving into the long straddle part of the equation. You guys agree?
I agree. I mean, retail is not going to do any gamma scalping. They're not going to be trading delta neutral. And what they're going to be doing is hearing that guy, realizing that RIMM has earnings later today, and they're going to go ahead and buy a straddle, and then they're going to call tomorrow morning when that thing moves $1.48, and both of their call and put, are right at the money or slightly out of the money, and they're going to be complaining that, I can make money in any environment except when earnings comes out and vol drops out. And no, I agree. I think condors, or put spread or call spread or credit spreads would be better than buying long straddles. Maybe selling. No, not selling straddles, but credit spreads and condors I think would be better than buying straddles.
Yeah, I think most things would be better than buying straddle. Throwing a dart at a dartboard for most people is better than a 95% loser like a long straddle usually is for most retail out there. But that is
I rarely ever see anybody make it. They're like, oh, what happened? My call's worthless, but I made $400 in my put. I'm like, well, how much did you spend on the net? 500. Okay, well now you're down 100. You know what I mean? It's you need a really volatile market where you can swing it both ways and in a short period of time, and I just don't see that happening.
Yeah, I've had a pet project going for about 8 years on how I could start off with a straddle, leg into a spread on one side, create butterflies, and I've still have yet to conquer that, and starting with a long straddle.
See, everyone here on the show, listeners, even we can't figure out how to really make a long straddle pay off. And Mr. Grigas certainly hasn't seen many retail ones play. And like I said, the only way I really made straddles pay off for me was when I was on the floor and I was actively gamma scalping on a regular basis. And even then, it's usually a break-even scenario. You're not looking to make a ton of money on that unless you have a really, really volatile market and you're very good at scalping. Scalping is an art in and of itself, as of course we've discussed on the show many times. But Mr. Grigas, you did give me a good segue there, which is of course RIMM, and they are one of the last big players to come out with earnings here in this cycle, and they come out after the close today. And speaking of straddles, that RIMM 1 day to go, 1 day to expiration, December straddle pretty much went out at around $1.80 to $1.90 or so in that range. So people banking on a roughly $2 move in this name coming out after earnings. And looks like so far, if you
looks
bought,
like they're out.
Yeah, they're out. And looks like if you bought that straddle, surprise, surprise, it's a loser. RIMM in the after hours. RIMM closed at 15.13, roughly unched on the day, and it's trading in the after hours now about 14.37, 14.38, or actually no, just dropped down to 14.35 or so. So yeah, unless this thing keeps moving, which it may very well do, you've got to move quite a bit for that straddle just to break even, let alone to make any money on the deal. You got to move to roughly the 13 handle or up to the 17 handle to really start making this thing pay off. Yet another reason why you should really, really watch your step when diving into the long straddle waters.
I mean, I literally had this straddle conversation with a retail client 3 days ago on RIMM, and I'm like, you realize their earnings are coming out. You realize these options are expensive. Here's the at-the-money straddle. It was anywhere from $1.50 to $1.70 it looked like this week. And I'm like, where's it got to go to for you to even break even? And it was those type of questions, the light bulb goes on and people kind of back away from it, look at different alternatives. And this thing was trading, over $17 last week, I think, last Thursday. So, I mean, this thing has already fallen. If you look at the chart and look at where it was last week, it looks like this has already had its move. I mean, there were a lot of put buyers last week. That'll probably be closing tomorrow.
Yeah, it was trading nearly 19 back in the beginning of December, and it's kind of just gradually slid down ever since then. Yeah, it's had a significant move just in the past few weeks. So if you're looking for big bang for your buck, you might have received most of it. And good old RIMM, just a lot of fun speculating on what to do with this bloated corpse of a company at this point. What they still have left to really, aside from patents.
Bloated corpse, that's a good one.
Well, I did make my living writing for a long time. I still tend to put a word or two together every now and then when I'm not busy yakking it up on the microphone here. But yes, RIMM, an interesting one. I'm sure I just alienated quite a few of our Canadian listeners who have a strong nationalistic pride bent in everything RIMM. But once you get past that audience, I'm not sure how many people are still loving RIMM at this point. Even the hardcore BlackBerry guys have started to move on to other things and other platforms. You're starting to see IT at most companies allowing things like iPhones. So unless you really need a physical keyboard or hardcore security with that BlackBerry server, they don't. Most people are kind of moving away from that platform. And of course, the old playbook, not exactly lighting up the old tape either. So that's going to do it for the old trading block. Before we close this one out, we should remind you again that it is, of course, ex-dividend time for those ETFs. So keep an eye on those if you are trading, let's say, good old SPY or some of the other popular names. And now we're going to roll right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for The Odd Block.
All right, and welcome to The Odd Block. This is, of course, a portion of the show where we discuss what's going on, what's interesting and or unusual, and sometimes highly dubious in terms of options activity. I'm going to kick things off today with good old WAG. Walgreens closed at $34.11, up 50 cents, or about 1.5% today. And this is the name that does about 24,000 contracts a day. They did nearly 70 today. And if you recall last week, and it's too bad Mr. Sebastian isn't joining us today because we had a long discussion on a previous show about his viewpoint on Walgreens and how what he was recommending for his clients going into this. I know he and Andrew have a particular eye on Walgreens for some time. It's one of their favorites. But it is interesting nonetheless to see even more activity in Walgreens. Twice in less than 2 weeks, we've had WAG on the old Odd Block. And of course, they have less than a week coming up before their earnings announcement. And yet we saw some interesting upside plays going on here in Walgreens. We saw someone coming in and picking up the Jan 35.39 vertical, the call spread, 9,200 times. So we're over 18,000 contracts going up in that one trade alone for $1.20. And as I said, that is a wee bit out of the money with Walgreens closing around $34 today. Stock's got to run roughly 7% for that trade to break even. And so a lot of interesting, that was the bulk of the interesting activity today in Walgreens, but still nonetheless, a lot of bulls coming out to play. And we discussed the vol levels in Walgreens being comparably low on a recent show here. So this trade looks like he's picking up on that fact as well and taking advantage of these relatively low vol levels to pick up a cheap vertical on Walgreens. Did I sound like I'm drunk?
Yeah, it sounded like you had a few hiccups coming through and or a big lunch or something. You kept going, like
well
that.
then, please. But any of you guys watching WAG since we discussed it on our last show? Anyone calling up at OX to pick up some cheap WAG?
Walgreens is one of the ones that a lot of people do look at and do trade actively. I think you said it does roughly 25,000 options, decent volume.
About that
we
level,
we do have a lot of retail clients that do trade in this. It doesn't move very much, so we see a lot more premium sellers in there. Obviously, this guy's taking a chance on it. Walgreens, obviously, a sector leader, and maybe this guy has an idea that it's going to pay off for him.
Yeah, I think this one combined with the comparably cheap vol levels we discussed on a recent show makes it a relatively inexpensive upside play this guy's making. And then moving on to good old Credit Suisse. Ticker symbol CS. They closed today at $23.16, up 58 cents, or 2.5% or so. Is the name that does a whopping 2,000 contracts a day, and they did nearly 25,000 today. So a lot of people sniffing around CS today. And what we saw was a lot of movement in the calls today. A lot of this driven by news that they're going to merge their iBanking and private banking units together to try to trim some costs. Apparently, these traders thinking that's a good deal because we saw people lighting up the tape in January call options. We saw quite a bit of interest coming in on the Jan 25 calls. They had a previous open interest going into today of less than 80 contracts, and we saw 11,000 going up, including a big block of 5,000 being purchased for about 90 cents at one time. The bulk of that 11,000 was indeed purchases, so a lot of opening upside buyers coming in here in January, thinking there's a lot of room to run here for CS. We also saw people picking up the Jan 23s for about $1.80, roughly 400 or so of those, and not too many of those, as well as the Jan 24s, which got about nearly 2,000 contracts lighting up the tape today at prices around $1.30 or so. And then, of course, some way upside optimists liking the Jan 26s as well for about 55 cents a contract. So all in all, a lot of love to the upside here in January for CS, with the bulk of that love falling on the Jan 25 strike. I know in our last show, Uncle Mike, Monday Mike, said that one of his rules is never to buy a financial stock. But that being said, you guys have any eyeballs or any interest in CS here? Are you watching it all? I know you guys like playing XLF primarily, but any watching or interest in this one?
No, XLF's pretty much the only way that we're in. We have some smaller exposure to Wells Fargo, and it's a unique situation where we have the exposure to Wells Fargo. But no, trying to stay broad-based on the financials, that's for sure.
Yeah, I was surprised, too, when I saw Credit Suisse up there. I figured that the unusual activity would be a put buyer or somebody writing credit spreads or bear call spreads. The majority of banking trades and plays that we've seen over the last 5-6 months have all been to the downside, which has mostly been a good thing for the people that have been playing in the banking sector. So it looks like your research is dead on, that the fact that the people are coming in to buy calls because it looks like some type of merger in their banking. Yeah, we have not seen people come in to play upside potential in any type of banking stocks in a long time. So maybe it's a bottom.
See, that's what makes it unusual. That's why we highlighted here.
Yeah, no, it is. I mean, I
I
saw Credit Suisse on there, and I started looking I brought up the put chain on the platform, and I just started, I like to look and see where it's at so I can kind of take an objective view instead of reading what you have on your notes. And I was like, oh, it's on the 25 strike call side. All right.
Yeah, I had the same reaction when I first saw this come in. I was like, oh, CS, so it's Credit Suisse, that's going to be another size put spread or something. And then I was like, wait a minute, upside calls, okay.
That could be a hedge against the CDS or against somebody that's shorting the bonds.
The voice from on high joins us, none other than good old Mark Sebastian. I hear Andrew finally let you free from the ropes.
Yeah, no, we've got him filming a bunch of content. I just had a bunch of jack stuff to take care of at the end of the day, and I apologize for my tardiness.
What is jack stuff? Eating jack cheese and whatnot?
Yeah, one of the things is sometimes these big, huge trades can be done as hedges against somebody that's shorting bonds or shorting different things as a way to kind of make sure they don't get into huge trouble. Now, this isn't that big of a trade, but it could be a part of something that went on in Europe as well.
That's true. That's true. This guy could have some exposure in the CDSs or some exposure in the fixed income side of Credit Suisse that we don't know about.
And let's not forget, Credit Suisse also trades in Europe. And so somebody could be holding something in Europe and see what's going on in the United States and think that there's a swap there with the ADR versus the physical. There's all sorts of crazy stuff that you see like that. Like, here's an interesting story. Back in 2006, I was a market maker for old GM, and we could not sell enough of the Jan 2010, or like the Jan 2009 and 2008, 5 puts, and at ridiculous prices. GM was trading 30, and we're selling these at 45 cents. There was just no way you couldn't hedge those into a profit, even on a sell-off, right? They didn't care what they paid because we did a little research, and I am 95% certain that the hundreds of thousands of those that were junk bond owners, and that was their one of their hedges.
Interesting. So, yeah. You see those every now and then, those little blips show up where people are, either ignorant or just don't care about strike. They just want to get X amount of exposure protection. And obviously, obviously the 5 handle was their level, and they just wanted to load up on that. And, regardless of what else they could do that is superior to that, they just want that protection. And if you're a market maker, that's gravy.
They're like a 16-year-old running into 7-Eleven. They don't care what kind of protection it is. They just want protection.
And this is why we missed you on the program. Those perfect off-color, family-friendly analogies that we look forward to on a regular basis. All right. And before we close up,
it was really good insight. I was actually on the edge of my chair. I'm like, oh, this really makes sense. It's a good story. And then he ends it with the 16-year-old.
That's Sebastian for you in a nutshell.
That is clean and usable.
You're right. It is. It's perfect.
That is Sebastian in a nutshell. That's what you're getting. You get a nugget surrounded by all sorts of uncomfortableness. All right. And before we close out the odd block, We're going to hit a quick review from something we talked about back on the show on November 17th. We were talking about the time unusual activity in Louisiana Pacific Corp, ticker symbol LPX, and we talked about the time that someone was gobbling up some relatively near-term upside calls here. We picked up about 8,500 of the D8 calls for 30 cents on this one. And this one, these are December, so they're expiring tomorrow. And looking at the chart today, this one's trading about $7.53. Of course, if you look at the actual, so on the surface, not exactly a winner, but if you look at how many this guy actually picked up, they did a total volume of roughly 13,000 on that day. So the open interest on this strike is only 4,000 right now. So this guy closed out some of them somewhere along the way. Weren't able to see exactly where he closed them out, so you can hope that he was able to get some of them off when the stock gapped up to about $8.25 back on December 21st. December 1st, and if he had a chance, either he scalped his gamma or he dumped them and scratched them for a relatively comparable price. That was probably his only option to do so. Otherwise, he's pretty much biting the bullet on this one. Of course, someone also had the genius move to roll up to the December 9s back on December 1st and pick up 1,500 of those for 15 cents, which are now still open and completely worthless. And following up, we saw yesterday actually really sizable sellers of the Jan 7 half puts coming in. We saw several thousand of those going up for about 60 to 65 cents in that range. So this could be this same guy who didn't exactly hit it out of the park with his D8s, continuing his bullish stance on LPX and just taking a different approach to do it. About 5,800 of these are open now on this strike, so one of the more sizable strikes here on this name that doesn't really trade many contracts on a given day, does about 1,000 contracts a day, or maybe even 500 on a given day. So pretty sizable volume in this one. I thought it was interesting and worth going back to another one who didn't really strike it out of the park with his unusual activity, but is not exactly giving up the ghost quite yet, and is maybe rolling back in for January. So we'll keep an eye on these Jan 7 halves and see how they work out as well. And that is going to do it for the old odd block today. And now we're going to roll right into the Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express block. This is the portion of the show where the boys over at OX regale us with some wit and wisdom from behind the iron curtain of Schwab. So, Mr. Grigas, what is going on in the land of OX/Schwab today?
Well, it's been a rough couple of days, and the biggest thing that's driving me nuts right now, one is that Van Eck exchange that we have next week. I talked about it last Thursday, so if you haven't contacted your broker-dealer, make sure you do and tell them you want to exchange or close out of the position or the options prior to.
Just get the hell away from that one. What a disaster that thing is.
It's going to be horrible. It won't be bad on Monday and Tuesday, but when they halt trading at Tuesday and we start the flood of calls come in and say, hey, why isn't this trading? We said, oh, hey, look at the note that we've had up there for the last month. You missed the exchange. I'll see you in 4 months when they pay you out. Or the next day when OIH and SMH, those are the two big out of the six, start trading, and they call me up and they say, hey, you got a problem with your website. My quotes aren't updating. Be like, oh, no. Even though they trade under the same symbol, that's not yours. You don't have that anymore. So that'll be a little frustrating. We're going to try to reach out to the people that haven't contacted us on Monday, give them one last chance to participate in the exchange or at least close out of their positions. Secondly, and I'm sure you guys are aware of this, I'm sure you had something on the Options Insider about Sears, SHLD, the non-standard options that happened yesterday. They came out with a reorg and don't know the terms of the reorg because one of the components of the deliverables is not trading, which makes it very hard if you're in a position right now, especially a December expiration. I have multiple clients that I've spoken to through the last 2 days that want to close these positions, But really, they can't. And if you see Sears over the last 3 days, it's really taken a tumble. So I got a lot of put holders that are in this non-standard Sears option. It still delivers 100 shares of Sears, but also delivers 4 shares of. Let me take a look at this company real quick. I love the OCC website because everything is in PDF, so it throws off your timing. But I think it's Old Orchard. Does that sound right?
Yeah, I think so.
So 4 shares of Old Orchard and 4 preferred shares. So there's another component or the underlying isn't trading for Old Orchard right now. So there's no way to price in the options. So they just gone ahead and halted them. They've been halted for 2 days. A lot of angry customers. I've talked to the OCC. They actually put out a memo because they're probably sick of hearing me that there's going to be they're still going to have automatic thresholds, but they're going to actually use the Sears underlying to do the assignments and exercises. So a lot of people are going to end up with Sears stock come Monday or over the weekend that they usually would probably have traded out of the options. And it's just another way that it feels like these corporate actions, some of these reorgs, are not the best for the retail client.
Yeah, you gotta love that one. Take one of these, take 4 of these, 2. Just take it all. It's all garbage. Here you go. You get some of these now
There's
too.
5 components, and if you look at the OCC memo, it says settlement is delayed. And I'm sure the OCC is very busy, but when I call them today and then I'm like, people can't trade out of these. I'm curious about assignment exercise over the weekend and what components they're going to get. And they were like, oh, no, they're still trading. And then I'm like, no, they're not. Call the SIBO, call the Philex.
Yeah, you can get 4 shares of Orchard Supply hardware stores common, or you can get cash in lieu of 0.5163 fractional Orchard Supply hardware store shares, or 4 Series A preferred shares of Orchard Supply hardware, or cash in lieu of that same ridiculous fractional ownership.
Well, your client's first mistake was having a long position in Sears.
No, but long puts though, long puts. So yeah, she's
nice.
up money. Yeah, a lot of the people I've talked to are long the puts, and they're like, I want to close it out. A lot of them were long the 65 puts. They paid between 8 and 10.5 for it, so should be trading around $15. They can't close it. And there's some
exercise.
Well, we were going to do that today, and I called OCC, and they couldn't deliver on the other 4 shares because they weren't pricing it yet. So
you gotta love that.
They were very vague, and then someone was going to call me back, and then that never happened. But
tell them to opt for the cash equivalent. They don't want to hold that.
They're going to have the shares over the weekend, and they're going to be able to close out the Sears common shares, but they're going to have that other pricing component or those other common shares and preferred that they have exposure to that they really shouldn't have, or at least don't do it on expiration. These 2 big corporate actions, these 2 big reorgs are happening literally on expiration. I know companies aren't supposed to look at it from that perspective, but you think there'd be somebody, at a regulatory firm that says, hey, you're really screwing the retail. I think they had enough this last 2-3 years, So a lot of calls on that. It's also, like he said, Tusa and Longo said about the ETFs, dividend assignment risk. I think we've mentioned that enough, but there's also the fact that the December futures contracts will go off because it's a quarterly. They stop trading at 8:30 Central, 9:30 Eastern. We get a lot of calls, and people should be aware that, if you're tied up in an option or even a futures contract and you haven't rolled by 8:30 in 1 second, you're going to have to sit on that and not use those funds until the settlement comes out. We have a lot of conversations right after the close, and they're like, hey, your quotes are down. Your E-mini December contract's not updating. We're like, no, it's a cash settled product. When they come out with the settlement sometime in about 2 to 3 hours, we'll go ahead and update the account. I want to use that money now, or just put me into March, which we would love to do. But, by that time, it's too late. So if you're going to want to use those funds or get out of those options or get out of those futures, roll them into March or close out the position because 8:30 they stop trading. I've seen some big-time traders with a lot of experience, tie up hundreds of thousands of dollars in futures requirements on that December contract, or they're using it for a hedge and they don't roll it into March, and then they're stuck for 2 to 3 hours. And in that time frame, the front month March contract can move around enough where you're going to lose money if you're using it as a hedge. So there's a lot going on this week. It's usual expiration week, and I'm sure there'll be some late days today, tomorrow, and on Monday.
This is why it's always fun.
Those late days.
Oh, I do. I know. I got some work to do when I get back to the desk. So it's going to be.
I want you to know, I appreciate you, John. I really do. I appreciate everything you do and stand for.
You complete me, John.
Literally, what I'm hearing, one of the big components of the buyout of Options Express was Me.
You? Yeah, they said we'll only buy Options Express if John Griegus agrees to stay on for an extended period of time.
Extended period of time. I want to lock him in.
I did see your name in that press release when they first announced the deal, didn't they? Weren't you like the fourth or fifth element that they cited there for reasons for doing the deal?
Well, he wasn't the fifth element. That was what's her face, the Russian chick.
A great movie, by the way.
Yeah. Oh, wonderful movie. That's not a good movie. Sorry, I would disagree with you there.
Even Sebastian doesn't like that one.
How many times have you seen it? If it's more than 3, I'm going to categorize that as a good movie. In the
sober or not sober? That would be my question number 2. Sober, half. Not sober, probably more than 3.
There you go.
Oh.
How many ladies in bandages running around fighting Muppets movies are there actually out there? It's a very limited genre, so if you want your fix of that, that's pretty much your only bet.
You are correct.
Yeah,
Bruce Willis. I mean, once you run out the Die Hard, scenarios, you say, "Well, what can we do now? We'll just throw you on a different planet." There you go, done.
What would you say is Bruce Willis's second best movie outside of the Die Hard regime, or the Die Hard, the Die Hard everything?
Blind Date.
No, what's the one where he's
the dead one? What's that one?
Where Damon Wayne's the football player?
No, not the Boy Scout or whatever. No.
Last Boy Scout? That was pretty good, wasn't it?
What's the one? Sixth Sense is probably the one.
We're not counting Pulp Fiction because he wasn't really like the guy from that.
Yeah.
I mean, like movies where he was legitimately the guy. What's his next best movie?
He wasn't really the guy in Sixth Sense either. It's probably his next best movie though.
Yeah, Sixth Sense doesn't really that is his best movie, but I don't think that counts either.
He's not really shooting the ghost or anything like that.
Anything moonlighting.
Yeah, he's
there we go.
Blowing stuff up. Well,
moonlighting. Yeah. Well, as we ponder that, we will close out the old Express block and roll right into the strategy block.
The strategy block.
And welcome to the strategy block. This is, of course, the portion of the show where Uncle Mike comes down from the mountains and dispenses some of his wit and wisdom regarding camping and cleaning fish and all that other kind of fun stuff that goes on out there in good old St. Charles. So, Uncle Mike, what fishing tips do you have for us today?
Set the hook. You could never set the hook too much.
You already gave us the best tip in the beginning of the show. Don't forget to put the plug in your boat.
That too. Put the plug in the boat, set the hook. You'll be all set.
There you go. Good to go.
Today one thing that I've been with the weekly options being the great fascination of the retail world these days, this is just something that is in my workshop right now, and I haven't really done too much with it, but just something to kind of ponder on. A lot of people have been, or at least from people that I've talked to, have been doing the diagonal spreads where you'll buy a 1 to 2 month option, 1 to 2 month call option. We'll say XYZ stocks at 50, buy the 2 month 50 call, and then sell weekly 53 and 54 calls against it over the course of 3 or 4 weeks with the hopes of financing the original cost of the call option. Now, with that, not a bad strategy, and I've done it myself with some clients as well for different situations, for depending on how we're hedging the stock and how we're doing different things. But the other thing that's kind of in my workshop right now is the diagonal monthly, weekly butterfly. So let's say, for example, that I'm bullish on XYZ stock. And once again, the way that we're doing it, it's part of a bigger picture. So I'm just kind of trying to take one piece of a bigger puzzle out of this. Let's say I'm bullish on XYZ stock at 50. And I decide I want to buy the January, and we'll rewind to this about a week or so. I want to buy the January 50-55 bull call spread. So just very simple concept. I'm bullish on it. I think it's going to go up. If it goes down, I'm either going to have a small enough amount of money on the table to where I'll let everything go, or I'll have my risk management in place as to when I'm going to get out, whatever the case may be. One thing that we've been just kind of experimenting with lately is selling a weekly credit spread against it. So we're long the January 50-55 bull call spread. If there's premium to be had in the 1 week 55-60 bear call spread, we've been just, like I said, this is just still in the experimental phases, but this is something to where by selling some premium against it, it's just a way of getting a little bit of extra premium on it. Reason being, now obviously, if the underlying stays the same or goes down, you're a genius in doing so. However, how much is it going to hurt you should the underlying go higher? Well, what you need to look at is the overall position delta, position gamma, theta, vega, and rho, whatever you want to call it, or everything that you need to look at to see how much is that 1 week bear call spread going to hurt you should the market go the way you want it to go from the get-go. Now, if it looks like, you know what, I'll make enough money from my January call spread to where that'll offset most of my losses and still be an overall profitable trade from my weekly call spread, okay, it makes sense. But if for some reason it does not, then you need to not do the trade. So the importance of it, make sure you're viewing your position deltas as you're going through this, and also make sure that you have a plan in place as to what are you going to do should the market stay the same, go up, or go down. But once again, in the experimental stages of this right now, but we're liking what we see so far. This is pretty intriguing of the diagonal butterfly, and that is one to grow on.
I like it, but I'm still waiting for my tip on whether I should use night crawlers or some other type of bait for my fishing tip. So let's get back to that.
Depends what time of year. Sometimes leeches are better, sometimes night crawlers, sometimes minnows.
You are asking the master of bait.
Yes. And cutting bait. As a joke, I used to do I used to be a guest on an options show up here on the north side. I was in Chicago. I forgot what station it was on, but I know the time slot it was in was sandwiched between a fishing show and a college football show. So it was perfect options audience demographic overlap there. We got everyone who's coming in, calling in for night crawlers, tips, and everything like that.
You would be surprised. I'll bet you that actually was a good demographic.
Perhaps.
That sounds like the ultimate hour and a half of entertainment to me.
It does indeed.
Fishing.
What more do you possibly need? You got football, you got fishing, you got options. How can life possibly be any better?
It was a pretty heady mix of quality content, if I do say so myself. But yeah, the calls were interesting. Let's just say on that show. All right, and with that interesting image in your mind, we're going to close out the old strategy block, and Uncle Mike will return to the mountains, and we will dive right into Around the Block.
Around the block.
And welcome to Around the Block. This is, of course, a portion of the show where we talk about what we're watching, what we're expecting for the coming week on our trading screens. And before we dive into that, we'll have one last update here on good old RIMM. It looks like that straddle, surprise, surprise, Mr. Grigas, still not paying the bills. RIMM is trading about $1 lower now, about $14.09. Stock closed at $15.13. So that roughly $2 straddle.
RIMM when you could just buy puts. That's what I say.
Yeah. Well, you missed it earlier in the show. We were discussing someone recommending in Reuters today to go out there and buy straddles if you're an active retail customer. And we were debating the folly of that and all the myriad ways.
Poor Doris.
It wasn't actually Doris. Don't blame Doris. I read that.
I love Doris.
It was some other person. I know most of the Reuters guys writing about options. I didn't recognize this name, so maybe that's probably why the story was such.
Doris is usually pretty good about that type of stuff.
Yeah, and usually, to their credit, they did have a line in a paragraph or so later, pretty much where the next person they asked pretty much said it was a ridiculous idea. So they did put that in. But still, it was my supposition that no one should mention straddles and going long straddles unless the next discussion is about gamma scalping, because you can't have one without the other.
No, I agree.
At least not in any sort of profitable sense. If you want to throw money away, that's by all means buy straddles. But yeah, looking forward to the week ahead. Of course, there's been a lot of talk about what's been going on with the VIX and what we're seeing going forward. And Mr. Sebastian, you missed our lengthy VIX discussion in the opening here, but I know you're chomping at the bit to get your 2 cents in. And of course, everyone and their mother these days is diving into the VIX debate. Everywhere you look, everyone's writing articles about why is the VIX down when the market's down, and all these other fun discussions, and how the VIX has routinely flummoxed everyone for most of the past week. So what has been your 2 cents on the crazy fluctuations we've been seeing?
You know what 10-day volatility's been over the last 10 days? 17. We're not moving. I think it's pretty simple. I don't know what else they want besides that it's the problem is that it's overpriced relative to how the market is moving.
You can make that argument for a while though, and it hasn't been coming off this degree of drama.
The other half of it is what I like to call I think you and I had this conversation on Friday. You've got this concept of I've just been hit by a car versus I am dying of liver failure or something along those lines, where, the market now has kind of realizes what's coming, how much everything sucks, but they're not so, unless we get something really surpriseful, why would they be scared why would they be fearful? You're not afraid of climbing down, you're afraid of jumping down. Does that make sense? And so we're not moving. There's this feeling that we're going to take the stairs down, if that makes sense, as opposed to the elevator. And that would make a lot of sense.
I think if I took the elevator versus the stairs, it would be very surpriseful to me. That would alarm me in many ways, shapes. I think we have a title for this show, surpriseful. I like it. That's a good new word. I'm going to add that to my vocabulary. But yeah, I agree. There has been interesting movements. And of course, all the people leaning heavily on the institutional side have been making that bet for months, saying the VIX should not be priced here. We're not making these levels. There's no way to justify these levels. I'm going to get short. And yet that bet has been stymied any number of ways for months now. So you had to be pretty pig-headed and keep rolling that bet for a long time before you finally starting to make back your losses going back to October on people who were loading up to VIX downside. Are you still leaning VIX downside here, or are you kind of flat now because it's pretty much a coin flip from this point on?
I think VIX product leaning down, VIX cash stable. Does that make sense?
VIX product, you mean like volume-wise, VIX is going to start tapering off?
Yeah, exactly.
I can see that. You're getting expiration
days. I think the futures are overpriced, but I think VIX cash is about fairly priced.
Intriguing. We shall see. And, of course, a lot of that volume is going to settle off after expiration as well in settlement. A lot of people moving contracts right now to close out positions and generating a lot of big spike in the volume. And, of course, Uncle Mike, what are you watching on your screens for the next few sessions?
I think what's interesting, we were talking a little bit about the financials earlier today. I think that XLF's kind of at a key point right now in that on the chart, in that it's kind of right around its moving average. I think that we will see some action in the financials, whether it's to the upside or to the downside. I'll give my 50% guarantee on that one, but it's kind of just tinkering around that 50-day moving average. It went below it. It kind of jumped up towards it today, and it's not what I would call a very pretty picture right now in the financial world for the short term. So that's probably the main thing that I'm seeing lighting up my tape, so to speak, as you like to put it.
I do like to put it that way. And Mr. Grigas, before we close out the Around the Block, aside from coming in early for all the expiration fun, what else is catching your attention these days?
A lot of people still calling in on mainly gold, oil. Gold was down to $95, $100 yesterday at its peak. So we're getting a lot of calls on that. Probably continue to watch that. The euro, obviously, the currency in the center spotlight. But adversely, we've seen a lot of people now interested in the dollar index, which took out support at about 80.5 yesterday afternoon. So a lot of people kind of watching that on the retail desk, seeing if it holds that 80 level and looking for some more upside movement and correlating with the dollar index. Also the interest rate futures, which when you said those people in the VIX have been suffering since early October, looking for some downside move, these people in the 10-year, 5-year, and 30-year notes have been stuck in there for about 3 years. I mean, I have so many people that have been short this for God knows how long, and you get a small move down, and that thing just comes right back up. So, I mean, people will be looking upside move on the dollar index and the interest rate complex. So we'll be watching those four products for the next close out the year, pretty much.
Yeah, that's true. VIX has nothing on the bonds. I mean, God, just on this show alone, we were talking down bonds back in July, and that hasn't come to pass in any way, shape, or form. So, and a lot of people have been doing it much earlier than that. So you're right. A few months in the VIX, it pales in comparison to the extended, prolonged period of pain that is the bond market right now.
I mean, the bond market, you could be short. I mean, you're eventually right. But, I mean, look, freaking what's-his-face from PIMCO got burned by this. I mean, he's right and just couldn't take the carry.
Anyone can be right. You got to just take the pain in the middle, and that's what so separates the men from the ladies. or the Sebastians, which
Bill
fall
Gross.
somewhere in between.
Did I say what's his face? I meant Bill Gross.
Yes, you said.
Yeah.
I actually know his name. Look at me, folks.
It's hard now that since he shaved off that mustache, it's doesn't pop in your
well,
head.
he said, you know what? Darn it, I'm too good to look like a child molester.
Yeah, and I heard he goes, "This is the second biggest mistake I've ever made." This correction in there, this bond market move, and obviously the answer was his mustache, shaving it off was the biggest mistake he's ever made. So
that's funny. That's funny.
All right,
I would agree with that.
With that image of another Sebastian man crush in your mind, we're going to close out this episode of the Option Block. I want to thank all of my partners in crime for joining me on the program today, starting off with the man from the mountains himself, Uncle Mike Tusaw. What is coming up in the land of KYO, aside from the big holiday shindig tomorrow?
All sorts of fun stuff. I am going to be a guest speaker with Trading Pub. I'm going to be doing a webinar.
Oh, those are nice guys.
Oh, good, yeah.
I like Morgan a lot.
Yeah, I've worked with Morgan back in the day, but I've actually never worked with him in this capacity before. But so looking forward to it.
No, it's nice. It strangely does not have the scent of some of his relatives on it, which is nice.
Okay, all right. So yeah, we'll be on Trading Pub on the 20th, doing a webinar at 3:30 Central Time, and come check us out. For more info on it, come to the Know Your Options Inc. website. I'll be a guest on 3 different Options Express webinars coming up in January. So go to the Options Express website to see more info on that, and just looking forward to enjoying this holiday season.
And how did your blood drive go? Did you have that already?
Tomorrow night.
Oh, tomorrow night. So yeah, if you're in, what is it, in Aurora you're doing it?
Yep, in Aurora, Illinois. Friday night, the 16th, from 4 p.m. to 8 p.m. Stop on by Aurora Christian High School and give blood, and make sure you don't stop by the Know Your Options Christmas party first, because then your blood would not work.
Yes, we'll turn your blood away. Too much blood. All right, thank you for that, Uncle Mike. And Mr. Grigas, what is coming up in the land of OX that will intrigue and indeed captivate our listeners?
Just a whole bunch of free webinars. I mean, our live events kind of tail off at the end of the year, so you're not going to see much through the end of December 31st. But that doesn't mean we're not putting out our free webinars, learning to trade. We're seeing a lot of new Schwab people come over from MFG and from the merger who are interested in trading, more complex spreads and having access to a better futures platform. Always advise them to check out the free webinars we have under the Education Center and the educational videos as an oversight to the overview to the website. Other than that, it's going to be pretty quiet through the end of the year. Do some shopping this weekend. That's what's up for me.
Last minute gift buying in the Grigas household.
Last minute. I'm a guy. This is early for me.
I hear Walgreens has quite the fine selection of products.
Yeah, I buy my calls like the other guy buying the what do you buy, the Jan 35s and help support the business.
Yeah, there you go. Pick up some Jan. He actually did a vertical, so it wasn't too bad for him. He did the Jan 35, 39, I think. So he's got a little bit of hope for him. But yeah, probably more hope than you if you go home for Christmas with some as seen on TV gifts from Walgreens in your pocket.
My wife's got the best gift of all, I'm there at 365, so I don't know what she needs to wait for Christmas.
Exactly. What else could she possibly need in life? I love it. And Mr. Sebastian, what is coming up in the land of the pit?
We're finishing up our silver course. I'm going to be on Tasty Trade on Monday. I'll be on Bloomberg Monday at 9:15 a.m. Chicago.
Are they going to make you wear the beret on Tasty Trade?
Absolutely. I insisted, actually. I said I'll only come on if you give me a beret with a mouth eating a carrot. And I'm also going to be on Bloomberg at 2:40 Central Time, 3:40 Eastern. I'm going to be doing Fox on Friday before the bell. It's a half day. We're running all sorts of we're running some special prices for our services ahead of Christmas. So if you want to give your relatives the gift of Option Pit, give us a call, 888-TRADE-01, and I will be happy to give you kind of the pricing rundown. We're not posting those because I don't want people to know what I'm willing to sell my product for because I feel like it's too cheap. So give us a call.
That's always a good strategy. I like it. Give it away when it's too cheap. When you start feeling the pain, you've hit the right price. There we go.
Exactly.
All right, so listeners, get in on the deals before they go away, and maybe swing by Walgreens. You'll see Grigas over there, and you two can do your Christmas shopping together. All right. And of course, if you're interested in any of the stories we discussed and more on the show today, then by all means, surf on over to theoptionsinsider.com. You can click on the news feed there for some of the headlines, as well as a lot of the unusual activity alerts and many of the other interesting things going on there, including Joe Cusick's articles and Mr. Sebastian's wit and wisdom and all the other fun stuff we have going on over at theoptionsinsider.com, as well as many of the programs here on the Options Insider Radio Network, all available for your listening pleasure, including our brand spanking new Advisors Option program. And I want to thank everyone out there for downloading and streaming and subscribing to the program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.